So how should investors brace themselves for the big week ahead? In today's Trader Triple Play, Jeff Kilburg, along with Mahir Dange down at the NYMEX, and Steve Guilfoyle joining us here at the New York Stock Exchange. Steve, since you're sitting right next to me, you get to go first. Would you have expected that today, basically a flatline kind of day for the Dow and the S&P and so forth, would have been more volatile, given Greece, given the comments out of Washington and in Pennsylvania?
I certainly would have. I would have thought that the Greek news, the bailout tranche, would have been more positive. I would have thought the miss on consumer spending would have been more negative. I would have thought we saw more movement there in the futures market before the open. We didn't see that. We waited for the political speakers. They've been pretty much lined up on their sides, defending those who voted for them, and they've been moving markets, which they didn't do today.
All right, Jeff Kilburg, let me ask you how you are positioning your accounts, your portfolios for the next week and the next weeks ahead.
Well, Ty, two very different stories here. We're seeing nearly a 100-point move in the S&P from 2 weeks ago when Boehner came out in a nice tone. But I'm looking at the 10-year note, which is really showing a different story. There's a lot of fear in the market with the 10-year at 1.62. But I am a believer that there's going to be a resolution. Therefore, I am playing it via the TBT. That's short the long end of the curve. It's an inverse-related stock that you can get long right now because I do see a sigh of relief coming after that in the bond market.
Mahir, how are these fiscal cliff headlines and negotiations rippling through your markets, and how, if at all, are you reacting to them?
Well, it seems like we're having some of the most of the impact right now because as we see headlines come out, we're seeing gold move $15 and $20 right now, and gold seems to be the risk-off trade as opposed to the safe haven asset. So what we're doing over here right now is we're only participating in levels that we feel comfortable getting long and getting short. And the best thing that we've done is participate into the options. The options have been very, very cheap. We're on 6-month lows in option volatility. So it allows us cheap protection to the upside or to the downside.
So how have you been making money this week?
Well, we've been doing it with the options, and we've been looking at levels. So for us, 1701 has been a strong level of support, and 1751 has been a strong area of resistance. So we've been participating kind of near those levels, which have been very successful for us. And another intermediary number is 1730 that we've been using as resistance.
Steve, how have you been making money this week?
That's exactly how you've been making money this week. You have to know your levels. You have to trade your levels. Okay, today 1414 has been a perfect pivot for the S&P. Every day you got to know your levels and you got to trade them when they get there. You got to be careful. You're only going for singles and doubles here because it's too dangerous. So there's no triples, there's no home runs,
no swinging for the fences.
Absolutely not.
Steve, thank you very much. Gentlemen, thank you as well.